just say $4 times 400 transactions, that's $1,600 a month. 50% of that's 8. So you're giving away 800. And then you have your time, you have your cost of cash, and you have your insurance that's going to come out of that $800 of revenue that you have. So at the end of the day, one location will probably make you $300 to $400 a month.
So in general, someone has, $1 million, right? They just sold a business, they just sold a piece of real estate, they're refinancing their house because they want to get entrepreneurial, and they're like, okay, I'm looking at real estate, I'm looking at crypto, I'm looking at stocks, or I'm looking at this ATM business with Michael. So Michael, make the pitch, if you will, or the argument or the persuasion here for why right now in the ATM business, and what kind of numbers. You work hard, you have tenacity, you have great customer support, you have systems in place. Why ATMs? What kind of returns are we looking at?
That's the $1 million question. If you put an ATM machine in a convenience store or a gas station, you can probably figure you're going to do 300 to 400 transactions a month. Margins have got a little slimmer, so the merchant, the owner of that store, if you place the machine, is probably going to want anywhere from 30 to 50% of the surcharge revenue generated at that machine. So say you're charging, like mine are charging $3.99. So just say $4 times 400 transactions, that's $1,600 a month. 50% of that's 8. So you're giving away 800. And then you have your time, you have your cost of cash, and you have your insurance that's going to come out of that $800 of revenue that you have. So at the end of the day, one location will probably make you $300 to $400 a month. But think about it this way: the machines are only costing you $2,200. So if you're making $400, the machine's $2,200. It takes you about 5.5 months to pay off that piece of equipment, and then it's nothing but cash flow and positive cash flow there going forward on a per machine basis. So 99% of your revenue depends on where you place the ATM. If you place the machine in a store, like a nail salon, for instance, that's going to do maybe 100 transactions a month, maybe the economics between you and the merchant aren't going to be the same. But then again, you don't have the amount of cash outlay for loading the ATM because it's got a less of a volume. But it's all about it. It's like anything in real estate. It's location, location, location.
Okay, great. Let me make sure I caught that, because that was a lot and that was great. I love how you packed all that content in here. So, all right, I have $1 million and I just want to start the first one. I find an amazing location, cash, high traffic convenience store. And let's just say it does 400 transactions per month at $4 is the surcharge, right? That's $1,600, but I got to give maybe 50% of it away to the owner of the property or whoever's leasing it out. So now my $1,600, right? 4 times 400 is $1,600, cuts in half to $800. Of that, I got to pay for my time, the insurance, the maintenance, whatever it might be. And so I'm maybe netting $300 for that machine. And that's when you say, well, it costs you $2,200. So we take the $2,200 and divide that by 5.5. That's essentially going to pay off the machine. Go ahead, Mike. You want to add to that?
Correct. That was about a $400 a month net profit.
Okay, $400. Okay, so a little bit higher. So about $400 net profit on 800. So about 50% is expenses and insurance and taxes or whatever else, right? So my net 400. Then I'm gonna take the 2,200 divided by the 400. It's about 5.5 or so, right? That makes sense. And now the machine's paid off, and now that baby is cash flowing $400 a month. And so do the math. I do that 5 times, right? Now was that $2K a month? Is that right?
Correct.
Yeah, $2K a month. Okay, good. All right.
On 5 machines.
Now, yeah, and then I'll do that 10 of those. Then that's $4K a month. I think I did the math right?
Yep.
And then yeah. So that's the idea. Is that a fair summary so far?
That is fair summary, because then if with 10 units, you're into those units about $25,000, and you're making $4K a month. That's a fairly decent return on your capital.
Absolutely. Now, how long does the average machine last in a lifetime?
Well, they amortize them over a 5-year period. I've been doing this 27 years, and we still have machines that have been in the ground for a little over 15 years. So most of these units don't break down. That's the beauty of it. The average service call per ATM machine across our portfolio and we have a little over 8,000 units out there, is less than one service call per year. And you're going to know right out of the gate when you install it if there's an issue. Most service issues are created by a machine being dropped or not installed correctly, or taken out of the box correctly, and they've dropped the machine. So you're going to have a service call in the first 30 to 90 days. Other than that, those machines are fairly bulletproof and they run forever.